stocks trade firm but ranged in sync with US equities overnight. Most sectoral indices gain while FMCG and PSU banks lag. Mahanagar Gas jumps on posting a jump in margins. Birla saw two gains on strong sales, deal wins and improving margin, while UPL slips as analysts stand cautious after product price erosion hits profit. And Mankind Pharma tops the 1400 rupee a share on its IPO listing day, a steep premium to its offer price of 1080 rupees. The debut is a strong signal of market appetite for the largest pharma IPO since 2020. Zomato skids even as Invesco marks down its Swiggy valuation and ONDC emerges an alternate platform for food ordering. One factor working in favor of ONDC is sharply lower prices. Is that enough? Is the big question. Hi guys, good afternoon and welcome to Business Lunch. I'm Pavitra. Those are the top headlines that we have for you this afternoon. For the market, we have another good day, although we have come off from the highs. Like you can see in the past few minutes, we have seen a bit of a drop. We're still holding above that 18,300 mark, but just around that level, around 40 points in the green for the Nifty. What's very encouraging is that the broader market outperformance really continues. So the mid-cap index is up 0.4%. You have the small-cap index, which is doing very well. That has also come off a tad, but it is still around 0.6% higher. The advance decline still in positive of the advances, although, you know, that has moderated a bit since the start of the session. At one point, there was a much stronger sort of preference for the advances. Like you can see that, band is just narrowed as we've moved in. So there is definitely a bit of a correction coming through, but this is something that we're seeing across sectors. You know, there's a good performance coming through across the board. What is perhaps doing the best right now, you're seeing a lot of the private banks hold up really well. IndusInd is seeing a good move up. It is one of the top gainers with a 1.5% move on IndusInd Bank. You also have Axis, which is looking quite good. Some of the auto stocks continue to do well. Remember, this was the top gaining sector yesterday. Once again, you have a good move over there. And then you have that outsized move coming in on all of the gas players. So MGL, of course, after its earnings, but on the back of that, you have Gujarat Gas, IGL, all of these doing very well, like you have it on your screen. Mankind, of course, we've spoken about it. There was a good listing that came through, and the stock surged over 20% on its listing, so that's very good. On the downside, some of the FMCG names, so the likes of ITC, HUL, those ones looking a bit weak, and of course UPL on earnings as well. So that's the shape of the market right now. All in all, it's quite good, although we have corrected a tad. We'll talk more about that, but let's begin Business Lunch by focusing on some stock moves. Mahanagar Gas, like I told you, is surging in trade after it reported a strong set of fourth quarter earnings. It's up over 8%. Sonal is here to break down the numbers.
Big move on Mahanagar Gas, and that is on the back of strong set of numbers that the company has reported, especially on the operating side, though it was a slight volume miss for the company in quarter 4. Going by the numbers, revenues, yes, they did decline 4% on a sequential basis, but that was expected, largely in line with the poll. EBITDA was up 52% on a sequential basis and came in higher than the poll at 390 crore rupees. Margin was a big beat, 24.2% versus an expectation of 20.4%, leading to a beat on profits as well. Profits were higher by 56% on a sequential basis to come in at 270 crore rupees, which is way higher than what the street was working with. As I said, volumes were a miss. Volumes declined 1% on a sequential basis versus an expectation of 2% increase. So that is where we need more clarity from the management from. And EBITDA margins per unit came in at 12.8 rupees per SCM, and this is a 7-quarter high number. So price hikes did really help the company in the quarter gone by. Now Jefferies says that they expect strong earnings in the second half of FY24, largely led by the falling LNG prices globally. They will look out for management guidance, especially because there has been a sharp price cut in the month of April following the cut in domestic gas prices. They have a target price of 1100 rupees per share on the stock. The conference call is at 4 p.m. today, so of course we'll get more clarity on that one. But the other city gas distribution stocks are also doing really well. Both Gujarat Gas and IGL higher in trade today. And if we look at the valuations, both Gujarat Gas and IGL trading at similar levels of around 21.3 to 21.6 times one-year forward earnings. What works for MGL additionally also is it trades at the cheapest valuations in the city gas distribution space at 12.8 times one-year forward earnings. And that is something also working for the stock in trade today.
All right, Sonal, thanks a lot for getting us all of those details. So Mahanagar Gas is the one which is clearly standing out on the back of its earnings. What's not doing well is UPL, like I pointed out. It is the top loser on the Nifty as well after posting weak Q4 numbers on the back of a rapid decline in product prices as well as delays in the planting season. We spoke with the management earlier to understand what the growth outlook for the company looks like and the guidance for Q4. Listen in.
Coming out of COVID in China, what we saw is the post-patent manufacturers of active ingredients in China really increase their overall productivity and supply into the market. And as they did that, prices started to decline. And as prices started to decline, it really froze distributors from buying products when they saw the price was moving quickly. And so as the quarter played out, we saw that prices came down almost on a daily basis in the last part of the quarter to where they are now. Now, as we look ahead to FY24, at guidance, we're guiding on revenue of 6 to 10%, on EBITDA of 8 to 12%. And again, we're expecting a very healthy cash generation from the business. Now, this year, unlike last year, we're not going to make a guidance on paying down net debt. We're quite happy with the current leverage that we have.
All right, weak set of earnings for UPL, but the management is sounding positive on perhaps how FY24 could shape up. Moving on, let's talk about the new kid on the block, that is Mankind Pharma. It was a strong debut for consumer pharmaceutical maker Mankind Pharma. The stock listed at around 1,300 rupees a piece, which is an over 20% premium to its issue price. And actually, since the listing, it has only moved higher. Earlier, we spoke to the management to discuss the listing and also, of course, their outlook for the business. Let's listen in to what they had to tell us.
We are in a transition mode. Everything happens at its own pace. And if you ask me what basically is a thought process in Mankind, we want to be the most admired company. We want to institutionalize Mankind Pharma. Every department is being controlled by the right professional. We are hand holding. And what's wrong in if some kind of involvement of a family is there, because whenever any kind of hurdles are there, we are always there to hand hold them, clear the roadblocks. When family is involved a bit, I mean, that really shows how passionately they are involved. But there's no doubt that we are on the path of professionalizing it.
The low price means quality is low. It doesn't exist, and nobody buys amongst medical profession. I don't think that anybody buys these things, because the quality, we are there in the market for 27 years. And most of the products are very economically priced. And I believe that we have proved it. We have proved in the market that we are absolutely quality products. We give quality products at affordable price. And we will continue doing it. We will continue doing it. And you will see that there will be growth in the market. When we are very, if you have quality, your product is backed with quality, and you need not to be afraid of competition, because competition is always there.
All right, 1382 on Mankind Pharma. That's a 28% jump from the issue price. A very solid listing there. But with that, let's also bring you some market opinion. Earlier today, we spoke with Lawrence Belanco from CLSA on his thoughts on the Nifty Bank, as well as the Nifty and the top sectors that perhaps look good right now. Let's listen in to what he had to tell us.
From a longer-term perspective, we think that's the key sector to be overweight within India, and will be a key driver for an ultimate breakout in the Nifty. But again, in the short term, we're back at the highs seen late last year. We expect some hesitation and a pullback, but that doesn't take away from its leadership credentials from a longer-term side. So look at adding on a pullback in the Nifty banks, but in the near term, again, some hesitation at last year's highs. In the short term, unfortunately, we think we get to top of the range. So we're talking about 18,500, 18,800. That's likely to cap the upside in the near term. And then we see further ranging activity. If you look at the Nifty chart going back 9 months, we've essentially been trapped in a 9% wide trading range between 16,700 and this 18,800 area, which is quite similar to the profile of the S&P chart, which has been range bound between 3,800 up to the 4,200 area, and we see more volatility within that range before ultimately breaking out. Well, we don't see it as a leadership group. Best case scenario, it holds in the current trading range that you see for the Nifty RT sector. So the leadership that you had from 2020 to 2021, we don't think the sector replicates that. and prefer the banks. Probably a smaller sector, but the real estate sector looks quite interesting again with a big base in place, a consolidation pattern over the past 12 months. And there's another setup where we can break out and see leadership, obviously a much smaller component to the market, but an interesting profile.
All right, that is the word coming in from Lawrence Blanco. He sees the upside target for Nifty at around 21,000, also saying that Nifty Bank is the key sector to be overweight on right now. By the way, spare a look at the market because we have come off significantly below the 18,300 mark now as well. And this slip has been in large part pulled, because of what's happening to the large metal names. So JSW Steel at the low point of the day. You have Tata Steel at the low point of the day as well. Hindalco has moved to the low point. So there's definitely some weakness creeping in. Aisha, Sana, some other names which are seeing some cuts. So the market is still holding up in the green, but it's just around 30 points higher right now. With that, let's also bring you some updates on the Go First crisis. The DGCA has issued a show cause notice to the cash-strapped airline for its failure to continue operations in a safe and reliable manner. So the aviation regulator has directed Go First to respond within 15 days now, and this essentially means that the DGCA will decide whether the airline can continue to have an air operator certificate or not. And with the latest notice, Go First, which filed for insolvency just last week, has been ordered to stop selling tickets immediately. On Monday, the airline, appealing to the NCLT, urgently sought bankruptcy protection as multiple lessors have asked for its planes to be deregistered over the past few days. And also note that since last week, several lessors have, written into the DGCA requesting to repossess the 36 Go First planes. So that is the latest that we have on this Go First crisis. We're, of course, tracking the story closely and we'll keep bringing you updates on this one. But for now, let's get into a short break. On the other side, will we see any disruption in the food delivery space with ONDC's entry? We have a very interesting analysis lined up for you in just a bit. All right, very clearly warning of the debt ceiling catastrophe there. That is U.S. Treasury Secretary Janet Yellen. But with that, let's move on to another interesting story that we have been tracking. Over the last few years, Zomato and Swiggy have been ruling the food delivery landscape in the country. But in the past few days, government-backed Open Network for Digital Commerce, or the ONDC, has emerged as a new player in this space. Will ONDC's entry, really cause disruption in the food delivery space? To tell us about ONDC and, how it really looks versus Zomato and Swiggy, we have Shilpa with all of the details. Shilpa.
Now, in the past few days, many users have started using ONDC for food delivery, and the orders, in fact, just in the last couple of days have doubled to about 20,000. Now, these users are pointing out on Twitter and elsewhere how food is significantly cheaper on ONDC and could potentially be the next big thing for food delivery. But is it really? Let me explain. Now, unlike Swiggy and Zomato, which are integrated platforms that control the end-to-end food ordering experience, ONDC is an open network where the restaurant can list itself, and then you log in onto a seller platform like Paytm or PhonePe, order from there, and then the restaurant fulfills the order either directly or with the help of a logistics partner. Now, what makes ONDC cheaper is that while Swiggy and Zomato charge restaurants a commission of about 18 to 25%, it's just about 2 to 6% on ONDC. And not to forget the massive discounts that are currently being offered by restaurants, platforms, and by ONDC itself. But does this mean that ONDC can disrupt Swiggy and Zomato? Well, see, ONDC does take away the single platform control for restaurants and gives them more visibility. And I spoke to a few experts who say that the unit economics are definitely better for restaurants on ONDC because they're currently not making any money on Swiggy or Zomato. And the lower prices are obviously more attractive to consumers as compared to Swiggy or Zomato. Now, ONDC is likely to emerge as a third alternative for restaurants and consumers to order from, and it could maybe take away about 10 to 15% of the orders from Swiggy and Zomato, and this could potentially also force both these platforms to relook at their high commissions and other charges. But it's important to note that the current discounts on ONDC can't be sustainable in the long term. And food delivery also has several factors at play to make it a seamless experience, like the speed of delivery, being able to handle high volumes at peak hours, having superior tech to make it seamless and capture data, and most importantly, customer trust that the food will be delivered as promised, and if issues arise, what part of the ONDC network will resolve this dispute seamlessly. That will be key for ONDC to succeed. Back to you.
All right, Shilpa, thanks a lot for taking us through that entire explainer. In fact, on this topic, we also spoke with Gautam Dugar of Motilal Oswal Financial Services and also asked him if ONDC can actually pose a real threat to Zomato. Listen in.
The scale at which ONDC is currently, the scale is very little right now. And they're doing 10,000 deliveries per day, across all their categories, across whichever cities they are present in. So roughly 3 lakh deliveries a month. Whereas Zomato alone does about 5 crore deliveries, right? So the kind of scale differential that exists today, I think it will take a lot of time before ONDC really becomes a threat for these players. So while it is obviously a credible threat, but right now in terms of the overall evolution of the that platform, a lot needs to happen before one bakes in that threat.
All right, perhaps it's a little bit too soon to be considering ONDC a threat to Zomato's business. But with that, it is time for a short break. When we come back, we're going to bring you a complete roundup of all of the important national news stories that we're tracking. So stay tuned. Welcome back. You're still tuned into Business Lunch here on CNBC-TV18 and some important national news updates that we're tracking. Karnataka is all set to go to polls tomorrow. With the campaigns done and dusted, all eyes are really now on the polling booths. The star-studded campaigns and fiery manifestos have set the stage for a heated election day, which will determine the fate of the 224-member Legislative Assembly. Now, the voting will take place from 7 a.m. to 6 p.m. and a total of 2,615 candidates are in contention. Remember, this is a three-way battle between the BJP, the Congress and the JDS. Counting, remember, will take place on the 13th of May. So that is on the Karnataka elections. But with that, let's also bring you an update on the situation on the Manipur violence. Over the last few days, we have been talking about the state which has seen ethnic clashes that claimed at least 60 lives and left over 23,000 displaced. Hearing several petitions on the Manipur issue, including one for a probe into the violence, the Apex Court on Monday directed the centre and state governments to file updated status reports. The centre told the court that no concerning incident had been reported over the last 2 days, and the Supreme Court also ordered the Manipur government as well as the central government to ensure rehabilitation and other arrangements are all in place for the victims of the clash. Now, the Apex Court will next hear the plea on the 17th of May. This is an important story. We're going to keep bringing you more on this as and when we get some information. With that, let's move on and bring you some more. This is the Israeli Foreign Minister Eli Cohen landed in New Delhi earlier this morning. He met with External Affairs Minister S. Jaishankar and is also scheduled to pay a visit to Prime Minister Narendra Modi as well. Now, Cohen has cut short his 3-day trip and will leave tonight post the meeting following the current security situation in Israel. His visit comes after the Israeli Parliament Speaker in March and economy minister's visit in April as well. So that is something important that we're tracking on the national front. With that, and to finally wrap up on this show, we have some sporting updates for you then. Manchester City will be looking for revenge and a boost to their hopes of a historic treble as they travel to Spain to face 14-time champions Real Madrid in the first leg of the Champions League. This is for the semi-finals. Remember, in last year's semi-final, Real Madrid mounted a spectacular comeback to win the tie after being down by 5-3 with only about 10 minutes to play. So the Spanish side then went on to win a historic 14th Champions League crown. And City, on the other hand, have never won a Champions League title. And manager will also be looking to break down his own route of not winning the trophy since 2011. So that's definitely going to be an exciting match, and for all of the sports enthusiasts, that's definitely some good news coming in. But with that, it is time for us to wrap on this edition of Business Lunch. We leave you with the markets holding up, but definitely significantly down from the highs of the day. It's just around 0.2% higher on the Nifty, below that 18,300 mark. The broader market has also slipped just around 90 points higher there. Thanks for tuning in. Mid-cap radar on the other side.